talk with people who, unless you're fundraising, you never really think of them. You know, it's these institutions that are the backbone of so many things in the greater Milford area, and we just take them for granted. You know, we go to the Claflin Symphony, there's a banking night, and the banks all participate. You need help with different events in the community, and especially the 4 banks who are here have always been there. Year after year, they're the ones that we count on to help our kids, our seniors, and our community. So tonight we're going to explore local banking, and why don't we start with introductions?
Thank you so much, Al. My name is Michael Carroll, and I'm the Vice President of Marketing for Dean Bank. We have 4 branches in this area.
Hello, Al. Thanks for having me here. I'm Shefali Desai, Vice President, Business Development Officer with the Milford National Bank and Trust Company, and we have 3 branches, 2 in Milford and 1 in Mendon.
And my name is Maria Ralphs, and I am from Milford Federal Savings, and I am the Customer Service Manager, and we have 4 branches as well.
I'm Ann Sherry with Charles River Bank. We have 4 locations that serve this market area in Medway, Mendon, Bellingham, and we also run an educational facility at Medway High School. And we just celebrated our 100th anniversary last year.
Congratulations.
Thank you.
You know, the show came about because we were sitting around talking about Citibank and, you know, all the services and everything they offer with private banking and everything. And I laughed because I said, wait a minute, I've had private banking my whole life. You know, even when I was overseas, I picked up the phone, I called back to Milford, and Tina Mafia always took care of me no matter what. I mean, I'm dating myself here, but, you know, I didn't need formal programs. Mm-hmm. And I realized how much we just take for granted the banking community we have. You know, so the first question always comes up. Why should I choose to do business with a local bank? So here's your chance for a commercial. Why don't we start? Why would I choose your bank?
You're going to start with the thorn among the 3 roses. I appreciate gentlemen first tonight. Thank you, Al. You know, it's an interesting question because when you get right down to it, the widget that our banks sell, or what we manufacture, or what we produce, so to speak, is no different than it's as rectangular and green as Bank of America's, as any of the national banks. That dollar bill that is our product, if you will, is really no different. So in many cases, we're on a very level playing field. It's really, the way I look at it is, how do we differentiate ourselves? How can we make ourselves completely different? And you mentioned that woman's name. I would imagine, not to speak for the 3 ladies here, but we all have those types of people that work, that are dedicated and passionate about community banking in our offices. And it's really I believe it's the passion and the commitment to service that will ultimately keep our customers satisfied and keep them coming back.
Definitely, I echo Mike. Main thing, the number 1 focus is the customer service for our local banks. And what I would say is the credibility, the bank reputation also goes along, and the image of the bank. For me personally, we have a customer, and it's the long-term customers. It's not the in and out, and same thing applies with the long-term employees starting from 5 to 30 years employment history, which says a lot. So customers, there is no big turnaround, you know, with the employment. So that gives us the good relationship, and we know our customers. We have our lending area. We are not going out of state. So we know where our customers are doing business, and we know the area. We know our customers and their families. So that's the difference. And the local banks, all the decision makers are approachable, and that's the big deal, because our customer want to know the answer. They can pick up the phone and say, Shefali, what happened? And I can go to that person and get the answer for them, which is a big deal versus the big bank.
Yeah, I don't think I'd be calling Citibank and trying to say, could I talk to the president, please? I have a question, or a vice president. Maria, why Milford Fed?
Well, let me tell you, Al. I remember those calls you made. It's funny you said that, because when you were calling Milford Federal to talk to Tina Mafia, she was probably then turning around and saying, "Here, Maria, process this transaction for L." I remember those days. And I would have to say, why wouldn't you want to bank with a small community bank? If you want that home feeling, hometown feeling of a bank, knowing that you can walk into the branch at any time and talk to a familiar face, our goal is to build a relationship with every customer that walks into our lobby and to make sure before they leave they are completely satisfied. We attend to all their financial needs. And we just had our 125th anniversary about 4 years ago. We were established in 1887. And our name has never changed. We've never merged. We're still the same bank, same location, extended out to some branches. We have the one in Woonsocket. And we're very big, like you mentioned, as far as being there for community events, charitable organizations. The president is always, it's a big focus that we do that always. And I have to say that with many of my customers, I'm on the third generation. I was told by their grandparents or their parents, you make sure you take care of my widows, when I passed you, I count on you, Maria, to do this, to do that. And I made a promise that I'm there for them. Whenever they call, they know they can get me, and I extend my services more than just in the lobby, in the bank. I go out to the nursing homes. I go into their homebound. Some are bedridden. I will go and do notaries if they need a notary. So the service is extended, there's no limits.
I think that one big difference is that every customer that we work with has a very unique story. And I think the people that are sitting here tonight, I think our bank, at Charles River Bank, we certainly take the time to find out what that story is and how whatever issues you're facing in your current situation, whether you're buying a house or whether you just had a child or you're trying to put your child through college, that there's someone who knows your story and can help you. And that's what the difference is between working with a community bank and a big bank. And I would ask the people that are watching this show today, if they are banking with one of the national banks or one of the really big regional banks, if you're working with them, a lot of people think, I'm using their electronic banking services. Who really knows your story when you have a situation come up or you need something special done, or you're trying to buy a house and maybe you've got a little glitch in your employment or your credit? Who's listening to your story and who's making the decisions about what's going to happen? As community bankers, we have a tremendous stake in every community we serve. So we are always out there trying to do the right thing. And that makes a huge difference. And that's why I would say to people, you really should consider your community bank, because these are people who want to know your story. They're invested in the community. And they can also offer you all the other services that you would expect, whether it's online banking, mobile check capture, applying for your mortgage online and then having someone follow. We can do it all. But the difference is the people here know what your story is and can help you in your specific situation. It makes a difference.
So now when you say, why wouldn't you? One of the perceptions, if I go to a big box store, they're big, I get better pricing. If I go buy at, Joe's Appliance and Grill, I'm gonna pay more and get less service. Fact or fiction? Why don't you start?
It's a fact. When customers are looking for, they are willing to pay. For example, we see it on deposit accounts, and they may say service charge today, and say, oh, by the way, your bank has such and such fee. Well, I would strongly suggest that any customers, when they recommend to review the statements and say, you may not see fees today, and maybe down the road, bank may change the terms and conditions, and they may see the fees. So it's very important that each bank has their appetite to pay or waive the fees, and say, for example, ATM fees. May say that, okay, we don't have that many locations, and we hear that all the time, which is we explain, and our job is to explain them, okay, so how do you avoid the fee? We have ATM card, debit card, debit card with MasterCard logo. So we educate our customers and say, okay, so use this card, and that's gonna, use as a point of sale, do cash out. And we work with our customers to work with what products we have and services, and we educate them.
But now, Maria, do I pay more when I'm using a local bank?
Absolutely not.
See, because that's the impression, obviously. I'm getting a
Yeah.
better price by going to Citibank or Bank of America. But, Shivali brings up,
Nope.
I haven't seen on my checking account statement, and my daughter's, my mother's, oh my God. I don't see a lot of these little fancy fee things.
I would suggest that if you compare the pricing at a community bank versus any of the larger national banks, that our fees will be significantly less than
Oh,
theirs.
less even.
Less.
Absolutely, significantly less. Everything from monthly fees to, whether it's an out-of-network fee, that the fees would be significantly less.
It's like on the ATM cards, or, my little card. I don't really, I see Bank of America everywhere,
Okay.
right? But if I put my little card in that, it seems like they nibble me $3 every time I do that. I
That's
don't
a-
remember paying those
You-
kind of fees.
You wouldn't, because we're a member of the Sum Network, and the Sum Network, they have an app. So yes, we don't have as many machines out there as a big bank does, but we have so many other choices available that you don't have to pay any fees, because this Sum Network is surcharge free, and they have an app you log on to, and they tell you all your locations that you can do your transactions for free.
So I really
free.
don't care
You don't.
that
It-
it says Rockland or
No.
Milford Fed. I just want to put my card in, get my
Right.
money, and not pay some, if I'm taking out $100, my daughter used to drive me crazy. Takes out $20, cost her $3.
Right.
I said, the
Oh, that's
percentage
crazy.
there.
Right. I think every institution makes their own decisions as to the fee structure. Speaking for Dean Bank, we've made the decision not to fee our customers for using, in addition to being part of the Sum Network that Maria mentioned a few moments ago, which we are, we've made the business decision not to fee our customers for using another competitor's ATM. Now, some competitors will charge you, and that's to the education point. We will educate how to avoid that as well. And that's where the personalized service really pays some dividends, because you can have those conversations, because ultimately we have the customer's best interest at heart. As you listen and as your viewers listen tonight, you're going to hear, I feel, knowing these ladies, you're going to hear some very similar party lines. We're community banks. I feel that we cooperate far more than we compete. I don't know if you would have a similar program with some of the bigger banks in the United States sitting and talking about ways we can help our mutual customers and to save money and avoid some of these fees. It really comes down to philosophy. Our former president, who retired a few years ago after 38 years, he always said, we are forever Main Street and never Wall Street. Dean Bank is a mutual bank. We're a non-stock bank. So to your point, that also factors into our decision-making process, where we don't have that pure sort of stockholder profit motive, where we're not beholden to the shareholders. We can operate and make some business decisions that are a little bit different than maybe some of the other larger banks.
Because I really don't care that it says Charles River.
Right.
I want money coming out
Correct.
without paying crazy fees. And again, when my daughter went up to Holy Cross, she started, because they were there, a Bank of America account. God help me trying to figure out that statement. It was like, unless you're a Buddhist worshiping on Tuesdays, you pay a fee. And whether, it was like all these little things, like you had to have a minimum, but I couldn't even figure that out.
Exactly. It's
Too many
often
regulations.
complicated, and we try to simplify things as much as we can. And, we may not have the million locations, but as Maria and as everyone's alluded to, we belong to networks that are, the information's very accessible, just a little app on your phone, or call us, or whatever, to find out all the
Yeah,
places
but
in
I'm
your
just
area.
looking for that some picture.
Or the
I
some
don't
picture,
care.
That's correct.
absolutely.
Yeah.
Sure.
Or, you know
But-
what, Al, one of the other big tips that we give all of our customers is never forget that you can, if you're ever in the middle of nowhere and you can't find somewhere, if you go into most grocery stores
Make a purchase.
and you want to buy a bottle of water, get $100 cash back with no fee at the cash
That's
register.
exactly
You can get
what-
cash back at the
That-
stores all
It's a,
the time.
it's a nice workaround.
It's
That-
a
that
great
was-
workaround when you're really stuck
That was
somewhere.
going to be my next point, exactly,
Yeah.
like
Yeah,
Ian
so
said.
those kind of,
Well, dang, so
I
I
have-
pay $1 for the water, I get a benefit.
Yes.
And I don't pay $3 for.
Exactly.
That's correct.
Yeah.
You could buy 3 bottles of water for the same $3.
I agree with that because
Not a-
my.
I'm
Yeah, go
sorry.
ahead, sorry.
Not only that, when you insert the card at any machine, before the transaction is processed, it will tell you this transaction is going to cost you $2.50, $3, $3.50. You have a chance to back that card out and say, no way, I'm not paying that fee.
Right.
If I can go next door and buy my pack of gum or a bottle of water and get the cash for free.
Again, I understand, you have those kind of employees that want to eat every day and feed their children, so you got to make a profit. And I'm okay. But I don't like being nibbled.
Right.
If you told me a checking account costs $50 a year, it's like my stupid credit card. If I want the benefit of getting miles, it's $125 a year. End of story. Okay, I make a decision. Am I willing to pay it? Am I not? But when you see these little nibbles, it just doesn't feel right.
Yeah.
It comes down to, again, the business decisions that each institution is making. There's one institution out there, it's a large bank, I won't say their name, but for a time, they were testing a fee if you actually went in to pay the teller a visit. That they would that they would charge or assess a fee for that convenience.
If I go and say, hello, Maria, she's going to charge me?
Maybe not to say hello.
Make a deposit.
Well, no, but I'm going in to make a deposit, do a
Correct.
withdrawal.
It's performing that transaction. They
I
were.
wouldn't like you.
You and any.
I can
dirty
tell you that
lobby.
it's none of the 4 institutions
no,
here.
it's not
certainly.
us.
No, it's not us.
You won't
Another-
stay with the local banks.
Another misconception. I'm going to buy a house. Okay? Well, I got to go with a big bank because they'll have the best rates. Maria, why
Not
don't you?
necessarily.
No. We have.
No?
No, that's not true.
Emphatically
We
no.
have comparable rates, if not better. And you get a disclosure up front with there's no hidden costs. All your fees are there. Before your time of closing, you know exactly what to expect. And the beauty of our loans, we're very high, we're very strong in lending. We were rated a 5-star for being so strong in lending by the CRA, that's the Community Reactive Banks, and we give great rates. And the beauty of our loans is that we service your loan through the life of
Now
your
that-
loan.
I
We
guess I was
service it.
spoiled. Because when I took out a mortgage, I took out a mortgage with you. And I wrote a check to you until my mortgage was done. Friends of mine have been like, they got 4 or 5 different banks over the course.
Right.
What's that about?
Well, it means that whoever originated their loan was not planning to service it, and they sold it and sold the servicing with it, and it became an investment to somebody that just got sold and sold and sold. And again, that's a big difference between working with a lot of the community banks, where most of the community banks will hold the servicing on their mortgages. Because again, the time that it's so valuable to have somebody who knows your unique story is when, let's say you have an issue with your taxes, or something happened at town hall, or again, maybe you lose your job and it's kind of hard to you need someone to talk to tell your story. And your friends that have had that mortgage
That
sold
had a bank
5
all of a sudden
times.
in Arizona.
Right, and then somehow a tax payment doesn't get credited, and who are they calling? And they don't even know who to call, because they've been referred to 6-800 number, this is the 6-800 number they're called, and they're not getting anywhere.
So now-
And that would not happen.
How does a bank make money? I would think you borrow money at one rate, you lend it at a little higher rate, and you keep
Yeah.
the delta.
Yeah, Or the spread, absolutely,
The
the
spread.
net interest
Spread,
margin.
yeah.
The difference between what we're paying our depositors for their CDs or some of their other deposit accounts, and what we're charging our borrowers for their mortgages and other loans. The difference between what we're paying and what we're charging, that net interest margin or the spread, is truly how financial institutions, make their money, make some of their money. The other way that they make their money is a nice little term. It sounds really good. It's called non-interest income. Non-interest income. It sounds very
Are
nice.
those nibble fees again?
It's another word for non-interest income is called a fee. And again, what it boils down to is it's the institution's decisions on what and how many and how much non-interest income they want to generate. There are a variety of ways of doing that. Some you really can't avoid. So for example, an overdraft fee. You overdraw your account. That's a punitive fee.
Yeah, but wait a minute, I have control.
But you,
Right.
the
Yes.
consumer
Right?
absolutely
I don't
always
have a
has
problem
control.
with you saying,
Always.
okay, if I'm silly, and I wrote
Absolutely.
a $10 check with $8 in the bank,
Sure.
I made the mistake.
Sure. So that you're absolutely right. But we do have some decisions on, I think to use Maria's word, being competitive or trying to really maximize that non-interest income. So when and the easy way to do it is visit some of these institutions, whether it's any of the four here or maybe some of the larger ones, and compare those fees. We all have fee schedules. We all have to charge some sorts of fees.
Sure.
So
But staying on the mortgage, we'll get
sure.
to the fees.
Yeah, sure.
after. I come in, you're going to walk me through what we need to do to get a mortgage.
Well, we're going to do two different things, and Ann talked about it a few minutes ago. We're going to offer as many modern conveniences as possible, and I believe all four of these institutions have a very robust online mortgage tool, so that if you are looking for a home equity loan, a home improvement loan, a refinance, et cetera, you can do that from the ease and comfort of your own home, if you wish. If you'd like to come in and pay a visit, absolutely, you certainly can do that. But once that process is over, really boils down to what is the rate of interest that we are going to charge you. And I'll speak for Dean Bank specifically. We have 4 branches. Our main office is in Franklin. I'm proud to say for the 6 years that I've been there, and for a number of years prior to that, we have been far and away the #1 mortgage lender in the town of Franklin, by a long shot. And very proud to say that. We're well known. We only have the 4 branches. We're in 4 towns. But in Franklin, our customers, our neighbors, they know us. They understand that level of service, the level of convenience that they're going to enjoy, and most importantly, that rate is going to be super competitive, if not one of the best around.
Now, one of the confusing items, obviously, is where do you get all your money? I mean, if you'd asked my father, he went in and he said one of those boxes has our money in it. He was convinced, old Portuguese thinking, that all his cash was sitting in a little box with his name on it. But, I mean, realistically, you service the loan. Doesn't mean you're holding that money.
Not actual money,
No.
yeah,
Right.
it's a note, promissory
But-
note.
Who, do you resell the mortgage as part of a package and then continue to service it? How does that work?
No, as few of us mentioned about how, keeping the service or selling it to secondary market. So it's a bank decision based on their assets, right? So we have to watch our deposit accounts, the total deposit, and we have our appetite. Okay, so how much reserve? So not 100 loans that we did, it's gonna go good and hunky-dories, right? So we may have to have the reserve that maybe 6% of the loan is gonna go bad. We have to take that into consideration. So we save that money in the reserves, and then rest of so deposit. So you are a deposit customer, and we have those funds that we can lend, right? So we have to balance the assets and liabilities. So liabilities is your deposits, and the assets are the loans. So that's how we manage.
So, Maria, if I'm first-time buyer, okay, I want to buy a house, what do I do? I show up, it's like, what do I do now?
Most customers today come in, they talk to a loan officer, and they like to be pre-qual. They like to come in and see if they qualify. because they don't want to come and, or they don't want to go look at a house that's maybe $500,000 worth when they know they might be only qualified to apply for a loan of $350,000. So it's always a good idea to come in first and say, I'm thinking of buying a house. What should I be in the market? What should I be out there looking for? Then you know you're not going to be disappointed when they can't approve your loan.
$500,000 for a starter home.
Oh, you'd be surprised.
When we grew up, you could have bought Milford for $500. They would have thrown in Oakdale.
Well,
So a couple comes in. I would imagine most of the times it's a couple. I mean, hard.
Sorry.
Sometimes not.
It must be
Today?
nice to be able to afford a house on one salary. But they come in, and what should they have ready for you?
well, it depends. If they already have a house in mind, then they're going to have quite, the real estate working with them is going to have good information. If they haven't shopped
But you said
yet,
for pre-qualification.
For pre-qualification.
I want to know what I can afford. What
They're
do I
gonna
bring
need-
you? A paycheck and,
they're going to need income verification, that they do have jobs,
that'd be nice.
jobs that they can prove that they have earned income, and their scores have a lot to do with that.
That
Their
credit score
their
thing?
credit score thing, yes.
Well, now we get it every month on credit cards, don't we? That FICO, I mean, it used to be Discover was the only one.
A lot of the credit cards are offering that, although those numbers will vary a
It's-
little bit
yeah,
from
it's different.
the actual merged credit scores
I agree.
that we get on our ends, and sometimes customers have some issues with that. But I would like to just add a couple of comments about, you come in as someone who's looking to buy your first home, and I think one thing that you really need is to talk to someone who can figure out, based on what your plans are, this might be your first home, but are you planning to stay there for a while? Or, just your general, again, what is your story? And we at the bank, our mortgage consultants at Charles River Bank will sit down and help you determine what the best product is, because a lot of people think, oh, standard fixed rate programs, but there are other programs that we can access, maybe through the mass housing program, which has some very special programs, especially for first-time home buyers. And for instance, we're working through the Federal Home Loan Bank to offer an equity builder program where people who are income qualified, if you come through Charles River Bank, can get up to $15,000 in assistance, a grant for your down payment, closing costs, things like that. Those are the kind of programs that
Income
at the community.
qualified?
Yes.
What does that mean?
It means if you're trying to buy your first home and you are in a low to moderate income
Oh, okay.
level, that you might qualify for
So
some
income
grant money
challenged.
to, well, not
A
necessarily
grant,
challenged,
a grant
but
from the state.
some hardworking people who just want to try to get into their first home. Maybe they've got a good steady job now, but they just haven't been able to save a down payment because maybe they've had to rent for the last few years, and rent is really
Well,
expensive.
15
Right.
grand is a great
Up to
deposit.
15 grand.
It's up to, sure.
It's up to $15,000, and it's not that every single person qualifies, but what I'm saying is there are programs out there that, as a community bank, that we're looking out to say, might you, as someone coming in, qualify for one of these special programs? And that's a big difference than someone going home and just applying online to whatever bank they see has the lowest rate.
Right.
Because that may not be the best program for them, because the closing costs could be exorbitant, or there could be some other issue that, as a first-time homebuyer, you don't know that. And people need to understand the value that talking to someone who is an expert in the industry, who cares about the community and the people walking in the door, the difference that it can make for them.
Well, I can tell you that the feeling of comfort, it was important. Because when my daughter got married and her husband want to buy a home, I mean, it's agita for everybody. Especially for them, because this is probably the biggest decision they're going to make.
Very emotional.
And
Yeah.
they don't even know what kind of house they're going to buy. It just, the rule was it had to be inside of Milford. It was clear. I want my grandchildren real close. So there's a rule. Anywhere in 01757 zip code, pick a house. But like you say, you may
Well-
get a cheaper rate and end up paying more. if you don't know what to look for.
Right. I think what it gets down to, and again, we've heard everybody here say it already, it's what's the motivation behind it? That customer coming in, those people watching tonight, they all have a story. At Dean Bank, one of our slogans is problem solved. So to Ann's point about listening to the story behind the customer, at a community bank, I feel very confident in saying that we care about your story, we care about your problem, and we're going to work very hard to fit a program into the solution that you need. Finding, so what we can say at Dean, like I said, at Dean Bank, we can say problem solved. We've actually taken the time to present a solution to you that fits your needs, not that checks the box for the shareholders or the flavor of the month, in this particular mortgage. We really want to make sure that everyone understands they are unique, they're an individual, and some of those, like the Equity Builder program, excellent program that's out there. It's a limited pool of money. Thankfully, it's been renewed over the last few years. But Mass Housing, also some great programs for low down payment for first-time home buyers. Could you get that at some of the larger banks? I suppose if you worked hard enough and you did that, but I can tell you that we are going to be diligent in telling you about that and being proactive in showing you those solutions.
I just can't imagine if I'm at a huge bank and you get a stack of applications that they're going to take the time
to go through
to
it.
go through. Because when we went down to the bank, the woman there was great. She just quietly, pedantically went through, 500 forms, but explained to my daughter everything that she was going through and why. And the tension level just drained.
Right.
You just felt a lot more comfortable that, this person cares about you.
Yeah, and the other thing that, I want to add to the mortgage process is, I personally get a lot of phone calls and say, oh, your rate is this and the APR is this. So our consumers, and that's where we take our time, and again, goes back to the education, and I personally explain them that, did you get the good faith estimate? So our listeners tonight, I would strongly recommend that if they are shopping for the rates, they must ask for the good faith estimate, because each line item, it tells you the details of the closing cost. And some banks may choose not to add that cost to the APR. Some banks do. So it varies. Even though the interest rate for 30 years may be 3.25, APR will be out of whack. Because not necessarily all the banks are for. There is not standard guidelines.
So
that
your 3.25 could be different from their 3.25?
Well,
No.
the 3.25 would be the same.
3.25 the interest rate would be the same, but the cost, APR, annual percentage rate,
All I care about is the check.
The
So the amount
cost.
I'm writing,
APR is the number you want to look
the
at.
APR then
is
is
the
what I
number,
care
because
about.
that's
What-
where the cost is involved. So that's where you want to analyze, okay, how much are you going to save if you are
It
refinancing,
used to
you
be the
know?
game you'd hear, your tax rate went down. But wait a minute, I wrote a bigger check this year than last year. Yeah, but the rate went down. Your assessment went up.
Yeah.
I used to sit there and say, wait a minute.
Right.
Old Portuguese mentality.
Okay.
Is the check bigger this year than last year? Yeah, that's an increase. I'm not smart enough to figure out why, but I can see one number is bigger than the other. So the
Percentage
APR
rate, yeah.
is what I want to know
Yeah.
is, for this house that I'm buying for $100, how much am I going to pay every year?
And at the end of the term, like, what is it going to cost you? So for you, some customers may say, oh, they just focus on monthly payment, but not necessarily. So especially if you come to me for refinance, we do the calculation. Is it really worth for you to refinance? I would do the cost analysis. I would do, if you do this, this is how much you are going to save after you pay the closing cost, So I would make sure I take my time and explain you the difference
Oh,
between
yeah, because
current
you
rate
could lower
and-
my monthly rate and zap me $5,000 up front or something
Exactly.
silly.
It may not
Right.
be worth it,
Well-
and that's what we do.
You also have to look at the fact that you just bought this house, but what is your long future? What's in the future for you? Do you plan on living in this house for a long time? Because to refinance and then 3-5 years down the road you might sell it. Well, you just spent money foolishly because you got to pay the closing costs. You got to maybe points. So
So realistically, Maria, you're gonna tell me you're paying X percent, I can get you Y, but by the time I put all these stuff, whatever you wanna call it, unless you're gonna stay in your house 3.5 years, you're never gonna break even.
Right, they'll do the analysis.
That's
We will
what-
do the
Yes.
analysis for you. Absolutely.
So now, you used a fancy word on this consolidated scoopy-doopy credit. I can't figure out this FICO, because I got my FICO score, and I picked up the phone, I said, what's wrong with my credit? And they said, what do you mean? I think it was like 830 was the top. I
Oh,
said,
that's-
I only
that's
have like
terrible, Al.
817 or something, and I said, what did I miss? And they said,
a very-
oh, you don't have any debt. And I said, well, wait a minute, isn't that a good thing? And they came back and said, no,
No.
we like you to have debt. I'm sitting there saying, now, wait a minute. Again, old Portuguese mentality, you work your whole life, you pay off everything. I would think my credit should be better and not be 13 points off, you know.
Although that's still a tremendous score.
I would say it's the excellent credit.
It's still an
If
excellent
It
that's-
didn't feel excellent, it felt like they were saying I did something wrong.
If that were your college exam, you would have gotten like about a 98 on
Oh,
it.
okay.
Yes, a very good score.
How do you figure out, you're
Well,
using a
we
different?
don't figure it out, the credit agencies figure it out. But a lot of it has to do with, first of all, your history of making payments. When you owe someone money, the biggest thing is, are you making payments and are you making them on time? That's probably the biggest part of it. But then it gets a little more complicated in terms of the percentage of credit available that you're actually borrowing. That factors into it. It's a very
Yeah,
complicated.
there are five main factors in the calculation of the credit score. And Ann's right, the top two. And I know
Well,
this.
you said
because-
number one is paying
well,
on time.
Yeah, payment history is 35% of that.
How
of
do
that-
they know?
Well, they know it by you writing your check every month, by knowing that you've made that payment for your mortgage, your car loan, what
So
have
you
you.
rat me
on
out if I
time.
miss a payment?
Yeah,
We
We don't,
report
we're
it.
required to
Delinquents have
report
to.
it.
We
Oh, okay,
report
all
you.
right.
If you enter into a lending contract, part of the requirement is to report to the credit reporting bureaus. So 35%.
I owe my $20 this month, if I don't pay it on time,
Yeah.
it's noted.
There's an on-time payment, there's a 30-day late payment, and it gets progressively worse from there. Yeah, really and truly, that score is an ever-moving
Do you get brownie
number.
points if you pay early?
You do
Like,
not.
on
You do
time?
not. You do not get any brownie points whatsoever. But one helpful tip to your listeners: the old adage was, "I'm going to pay off my credit card and close it." That's actually, in my opinion, and based on the way that the algorithm works, Ann just talked about it, 30% of the score has to do with what's called the capacity. And Ann was saying the high level of credit, what you're approved for and what you owe, the difference between that. So let's say you had 3 credit cards, all with a $10,000 balance on it. All right, and you had a 0 balance on all 3 of them, and you closed one of them. Your capacity actually just went down by $10,000.
That counts against me?
It would, because that component of the score is looking at the ratio between your available credit on all your outstanding lines and how much you owe on those lines. So as you reduce, you can pay down and get to 100% capacity. But as you lower the ceiling, as you start closing some of those accounts, it can. We're not credit experts, so I don't want to say that it will
okay, so,
emphatically.
I mean,
but
first of all, that would never happen, because my daughters would make sure that nothing,
Right.
you know, they still use my credit cards,
Yeah.
but number one is pay on time.
right,
Number two is maintain a good level of capacity.
correct.
Is there a
Yeah.
number 3?
And
Yeah, there's a
they-
3, 4, and a 5, and they get progressively lower. 15% is the length of time that the credit card has been open. I remember going
Yeah.
to Providence College and going onto the student union, and Sears was there with their Sears card. And so this was in the 80s, and I opened it, and I had it for 20X amount of years, whatever. And I ended up closing it and realized about 2 days after I had closed it that I had actually just closed the longest standing trade line in my credit report. So a small portion, so in essence, if I had pulled my credit, it probably had gone
So
down
I'll
a
get
few
brownie points, because my first credit card, Paul Revere chiseled it out of stone. Okay.
So, yeah.
So-
You do get brownie points, yeah.
Yes.
Yeah, the one other factor that I want to add to pertaining to the credit card balances. So, for example, one of the example that Mike mentioned, if you have $10,000 line of credit limit on your credit card, and if you go up to that limit, like it gets closer to 9,500 or 10,000, you are considered as a high risk customer, so and that takes away the points too. So all little this itsy
Yeah, but they
bitsy,
keep,
They
every
are
time we hit
giving you-
near the top,
yeah, but
They
then
raise
if
it?
you, as
they
you
would
reach-
raise it.
That's a good thing.
exactly.
Yeah.
But as
From
you
a,
go
from
to
a
the
credit score.
exactly,
Oh, okay.
and that
Not
takes
from my wallet.
No, no. Strictly from a credit score, so you're increasing your capacity in that case. So.
But if you've maxed out all your credit cards, it adds to a risk factor that
It's
is
the
not
high
good,
risk.
that is
Yeah.
not good for your
But if
credit
they see
score.
you paying, now, here's a question. Again, old Portuguese, I get a bill, I pay it. So
Right.
the credit card companies are never really happy with me because at the end of the year,
No
it says
interest.
interest paid, zero.
Right. But you're from your credit score perspective, and not to beat this horse to death, a fully paid off, a zero balance, open and active credit card, each month that reports is paid as agreed. So that's
Oh, so that's a
actually,
good
thing. That's good.
it's a good thing. So
That's a
your
good
credit score is going to be healthy and it will be maintained or go up. So,
over 800,
Yeah.
which is what you do.
right.
Yeah, I just didn't understand why I couldn't get all of it. but-
Yeah,
Now,
yeah.
Al,
So-
you had asked if I pay early, do I get any points? You don't get any points there on the credit cards, but going back to the mortgage payments, what I've trained my daughters to do, because they also purchased new homes last year, and now they all have nice big mortgages, and I drilled into them that if you can afford, if you can manage to pay instead of 12 payments a year, if you can get a 13 payment in, make 13 payments during the calendar year, you can cut off the life of the loan by about 7, 8 years.
Yeah, I was
That's a
amazed,
big,
'cause
that's
when
a
I-
big,
Lexi pays, like I used to, so much more. When we refinanced, we had the same mortgage number payment, even though technically it went down like $500-600. And it was amazing when you did a spreadsheet, how that 30-year dropped to 20-some years,
Yeah.
dropped,
24, yeah.
you know. Now, does it matter what kind of loan I take? Like I come in and borrow for a home versus a car. Does that count differently or?
I can answer it. I teach this. I've done some studying. 10% of the score, so it's very small, has to do with the category of credit that's out there. So if you went into any one of our institutions and took out an auto loan or a mortgage, it would likely, because we're an FDIC insured institution, that's sort of in the very favorable categories. There are some other lenders out there, finance companies, those types of store charges don't factor quite as highly. And it's indicative, and maybe it's a little archaic, but it's indicative of the type of borrower. If you're, in other words, if you're going to that type of place, that perhaps your credit is not as good. So at the end of the day, it's a very small factor. Only 10% of the score is that. And then the final 10% is the number of inquiries that happen over the course of the year.
Number of inquiries?
Right, so you apply for a mortgage, and then a few months later, you go to somewhere else and you apply for a credit card, and then another month later, you apply for a car loan, and then you go back and you apply for another credit card. There's a tipping point. What that tipping point is, we don't know, but it's indicative of you actively and aggressively going for credit, which may be, again, indicative of perhaps some problems. Most consumers only get their credit report pulled formally for a loan around one time a year. Very few consumers get their credit pulled more than 4 times on any given year.
So now, my darling bride is the queen and my beloved offspring of opening a new credit card. Because they'll go to the store and if you open a credit card, you get 15% off that day.
Right.
They get home, I get the bill, I pay the bill, and then they close it. Does that work? I mean, it works, you get the 15% off, but does that work against you?
If you do more frequently, then no. then it goes against you because you are opening, and closing. So it depends on how often, because again, it goes back to the trade line, how long you've been a customer with that company or with that creditor.
Yeah.
So again, you have to be careful because that's what I hear a lot. And again, goes back to the community bank. We work and educate our consumers, stuff like this, who may not have a good credit. And how do we educate them to take care
Now,
of
I'm
it?
going to date myself, but many years ago, when we were coming home from Paris, I read an article that said you had to be careful because the credit card was in my name and my darling bride's. But they said, no, it's in your name. I said, well, wait a minute. Everything we do together. Don't we both get the same benefit? And back then,
Depends if
Citibank
it was
told
a-
me, no. I got annoyed. I canceled mine and opened one just in her name. I mean, is that still?
Was she an authorized signer?
Yeah.
Yeah.
Look, there's a difference
Yeah.
between a joint borrower, so in other words, you both apply for a mortgage or a credit card together, and they're judging that lending decision on both of you together, then you would equally reap the benefits or
Okay.
pay the consequences, to Shafali's point. If she was merely an authorized user on a card that you got in your name only, then her behavior doesn't do anything.
So she gets no benefit then?
As an authorized user,
Because
correct.
that's what they
Right.
explained to me, and I got so annoyed saying, wait a minute, this is my partner.
Right.
Everything we do is the two of us.
Yeah.
No.
And they said, no, it's yours. I said, really?
Yeah.
Cancel it.
It flows back to the
Yeah.
application, the original application that you submitted or both of you submitted.
But if we both submit an application for the American Excuse Card, then we both get credit, or, that's okay.
If you're joint
Jointly.
applicants.
Joint applicant.
So I mean, that's
Yeah.
what we had to be careful of then, is that we,
Correct.
I mean, like on the house, we're joint.
Yeah.
That's
She
correct.
pays half the mortgage with her income, I pay half, you know, it all comes together. There's no such thing as her money and mine. I'm the father, I get an allowance. If I got my
Yeah.
$2 for coffee, I'm a happy man.
So as long as both of you applied for the mortgage and both of
Both,
their
yeah.
names are on the mortgage, then it impacts.
Okay,
It's a
your-
joint.
so
both
we
your
should do the
credit
same
scores.
thing when you go to credit cards, to make
Yeah.
sure that both of you do, because,
Credit cards are far more prevalent where there'll be a line very close to the signature line. Would you like to add anybody else to this card? And that's, as they said, that's an authorized user or an authorized signer.
yeah, my daughters.
Right,
Yeah.
so they're
Yeah.
reaping no
Yeah.
credit benefit. They're definitely reaping a benefit off of dad's card.
That's a great benefit.
Well, yeah, like I asked my daughters, you know, okay, you're now in your 20s.
Yeah.
Is it normal that you still bill all these things to
Under-
your father?
under
And they
dad.
just looked and said, yeah, that's normal. So I was like, okay, if it's normal.
It's time to get your own.
If they say so.
They have their own, they just don't like using it.
Oh.
It's easier to use dad's.
But they do need to use theirs and pay theirs to build their
To
own
build
credit
credit.
history.
They need to build credit because for the youngsters to get their first card is not easy. They apply, but they come back denied for insufficient credit. Insufficient credit doesn't mean it's bad credit. There's just no credit to
Well, we
monitor.
got into a battle, I remember at Citibank, because my daughter, when she turned 11, we gave her a credit card
Oh,
and said, you're gonna learn, you get one chance. Because I read this article, how kids go to college, and they got a credit card and they go crazy. Well, my daughters grew up with a Milford Fed ATM and a credit card, and to them, it was never a big deal. But when they went to apply for their own, we were told they have too much credit, because they were listed on my card.
oh,
Okay.
so they didn't.
I had to write to the president, which, you know, I probably got the 4th level of nobody somewhere in South Dakota answering it, before they would give my daughter a credit card. You know, and again, there's a problem with trying to deal with a big bank. You know, I live in Milford. I don't want to talk to somebody in South Dakota,
Sure.
you know. Now, one of the things people always get nervous about is my money safe in this little bank? You know, I mean,
Absolutely
Very
safe.
safe.
you know, my father knew there was a box, and if he went in, they would open the box and his cash would be, but
Sure.
all kidding aside,
Yeah.
I'm putting my money in there, into a local bank.
Yeah.
Is it as safe in a local bank as it is in Chase or City?
Absolutely.
Absolutely.
We are all FDIC insured, and many of us also have secondary insurance. At Charles River Bank, we have the Share Insurance Fund, so all depositors are insured in full. Every last dollar in the bank is insured. So we have even better insurance than the big banks because they only have FDIC insurance, which is generally $250,000 per account. Accounts can be structured to give you additional FDIC insurance, but they do not have that secondary insurance like we do. So we have better insurance than the big banks.
And Dean Bank's the same way. We happen to also be a member of the Share Insurance Fund, or member SIF. You'll see that on our logo. And as Ann just mentioned, so regardless of the deposit balance, you've got a family who has $700,000 in a deposit account at a Dean or Charles River, and I don't mean to not speak for you guys, but I'm sure you have some sort of excess insurance. So we can insure every one of those dollars regardless of the deposit balance.
So there is no real risk.
None whatsoever.
And you know what? As a customer service rep or anyone doing transactions for customers, you're looking at their profile, you're looking at their balances, and it's our responsibility to inform them and say, you know, Mr. Smith, I see that on this account you have $60,000 above the insurance amount because it's $250,000 per person. So a couple, 2 names alone on an account, automatically you're insured $500. If I see $600 in that account, it's my duty to tell them, let's take $100 or $150 to give it room for the interest to grow, and let's place that in a different account under a different title, because it's all on how the accounts are titled. So you have so many ways to insure these accounts.
So I can have more than
Oh.
$500,000 for my darling bride and I, and still be insured by just,
Millions.
Just the FDIC.
Because
Just
that's how-
FDIC alone, you could have a couple of $1 million insured, no problem. And then if you bring children on, then every child you bring on, it's an additional $250,000. But then there's joint accounts, there's single accounts, there's trustee
there's
accounts.
room.
There's
There is room.
plenty of
We-
room.
That's what we work with our clients, like creating a different entitlements on the account just to insure.
Now, I hear, and I have I don't know what you call it, an equity line on my house.
Open line?
It makes more sense that, in my mind, that if I was going to carry a credit card balance, that I'd rather take out an equity line than pay some ridiculous, because I know my credit card carries, it was crazy in the day, 15, 16% interest.
23, 20.
And I never cared because I pay it
Yeah.
off.
Sure.
You know, I get the bill, I pay it.
Right.
So the interest never bothered me. I wanted the miles. But if somebody has to carry
Uh-huh.
a balance, are they better off taking out a second, what is it, an equity?
A home
Okay,
equity
but
line
an
of
open
credit,
line.
or yes, a home equity line of credit. In general, a home equity line of credit is the great option for someone who's got a large expense like that, like a college education, or maybe they're making some improvement to their home, or maybe they make a decision that if they're buying a car and they're not able to get a good financing rate, that maybe something like that, or you know, someone's wedding. Those kind of expenses are typically what people will use a home equity line of credit for. And the great thing is that in most cases, the interest charged is tax deductible, just like your mortgage interest is. So there's a lot of benefit to do that, as opposed to putting it on your credit card and paying 22% or 15% or whatever it is, because that can be very, very expensive.
Would you have
So-
to wear a mask if they're charging you 22%?
I don't think you're going to see that here.
No, but I mean, seriously, so I'm better off. If I lost my job, something happened and I need a bridge, not to extend my credit card payments, but to go into the local
Yeah.
bank and say, hey, what can I do, especially if I have some equity built up?
Yeah, but we want to educate, going back and back to teach our customers, and because, you know, with home equity line, most of the line of credit has interest-only payment. So if you are not explaining them how this works, you may have that balance for forever. So
Oh.
you have to discipline and make sure that, you know, you want to pay off in 5 years, and we would do the calculation based on current rate. And I would say, make sure you pay $550 every month.
Not
so
the
you can,
500.
Right.
or depending on
Right.
how soon you want to pay off. So those are the things we work with our customers and educate you that otherwise you may see that $20,000 forever on your line, and when it comes back to the repayment period, you'll see the same balance, and you would say, Shefali, I've been
I've been
paying
paying
every
for 5
month.
years
And what is
Didn't go
going
down.
on?
I still owe that much
Yes.
money.
That's
So
correct.
it's very important
right.
that I won't recommend just replacing your home equity with credit card. It's not a good idea.
Yeah, I would not, in
Yeah.
general, recommend that people take their credit card balances and put that into home equity, because that generally means that
Yeah.
they've got kind of a spending issue. And
Oh,
Yeah, we don't want to,
no, that's why I said a
Go
lot,
to
it's
that.
generally better for those kind of longer, just large amount expenses that come through, tuition, things like that, so.
yes, thank God we're behind that. I mean, when I went to Holy Cross, I couldn't understand how my parents, working
they
at
did it.
Draper's, paid $6,000 a year. And then all of a sudden, I start paying off my daughters at $5,000 a month. Well, it was nice to get that behind us.
Yeah,
Same here, thank
Yeah.
I'm
goodness.
going through it
Absolutely.
now, so living through those college.
Is that the biggest challenge you see? I mean, if you think about pay for 30 years, your house is paid off, and then you realize you got an equally large mortgage payment coming called tuition.
It's a challenge.
Yeah.
It's a
It
huge
is.
challenge for so many families now. And, again, having a relationship with your bank and your banker and your financial planner at your bank, too.
Right.
Because if you can start
Good point.
early enough to help save money in some really tax-advantaged programs, it can make a significant difference. And then knowing, kind of planning whether through a refinance process or a home equity loan to help you also pay for some of that. Because even now, some of the student loan, if you have to take a private student loan, the rates on private student loans,
7 to
I was
8.
going to say 7, 8,
Yeah.
9%, they're getting up there on private student loans. So if you can work with your bank in advance to be able to have home
Holy
equity
moly.
available to you, it makes a tremendous difference in the total,
Right.
your total cost.
Borrowing 60 grand a year at 8%?
It's crazy.
How would you ever dig out of that
Crazy.
hole?
Well,
crazy.
But you do, and it gets back to what the theme of this whole conversation has been: options, education, and ultimately the institutions taking the time and caring enough to look at the customer over that entire life cycle. What are the solutions to the problems that you're facing, not only today, but maybe 5 years from now, or perhaps 20 years from now when your infant child and your toddlers are college-aged? Working with your community banks now can help get you ready for that.
Well, it sounds like it's even worth, if I've got a mortgage, just to go down to the bank and say, Ian, Maria, should I do anything? From what
Yeah.
you're saying,
Absolutely.
I could
It will-
take
it
a
will take the
mortgage I've
time.
had for 5 or 8
Yeah.
years and just say, okay, I got 22 years left on this thing. Every once in a while, you call the phone company and say, do I have the best plan? Sounds like if
Come
I got a
and see
local
us.
bank, I can walk in, make an
Definitely.
appointment, and
Definitely.
And we will welcome
Absolutely.
that. We will
Yeah.
welcome that.
well, as always, it's amazing what resources we have at the center of the universe. I started out with a commentary that, especially these 4 banks, always seem to be there when we need help in the community, whether it's helping us bring the symphony and having bank night, whether it's helping with scouting programs. I mean, they're the first ones we remember when we need help financially. I hope that you'll also think of them first and just go talk to them. Just go walk in and make yourself an appointment and learn, because it sure seems like they're a lot more open than the very large banks that are available. So as always, thank you for everything you do. And to our 6 loyal viewers that are watching, may God bless, and may tomorrow be a better night than tonight. Thanks for joining us.
Thank you, Al.
Thank
Thank
you.
you.
That went by fast.
Thank you.